Hello and welcome to the Better in Business podcast. This is part 3 of my 7-part series around business fundamentals. So if you haven't listened to 1 and 2, 1 is about 20 minutes, 2 is only about 10 minutes. These are going to be pretty fast and furious. I want you to think of them like a mini course, okay? So in today's episode, we are diving into sin number 3 of the 7 deadly cash flow sins around receivables in order to help you do better in business. Okay, so listen up and I'll see you in the episode. You've tuned into the Better in Business podcast, and I'm your host, Jeannie Savage. I'm a multi-award winning business veteran and head of the Strategic Bookkeeper Network. My network of strategic bookkeepers is dedicated to helping entrepreneurs do better in business. This podcast aims to challenge your thinking. If you're not thinking the right way, how can you act the right way? Each episode will dive into key drivers of success, which I also call the rules of the game. Learn the rules and play to win. Let's go. I like to start every episode by reminding you that it is globally recognized that pillar number 1 for success is up-to-date, accurate bookkeeping, which is the only way you can see how your business is performing in terms of profit and cash. If your books aren't right up to date, visit betterinbusiness.global, drop me a line and I'll connect you with a certified strategic bookkeeper. Fire your bookkeeper and hire a strategic bookkeeper. Bookkeeping is a cost, whereas strategic bookkeeping is an investment that averages a 10x return on the fees. Okay, so sin number 3 is around receivables. You must listen to the first 2, okay? So if you haven't done that, go and do that now. So let's jump into this one. So the deadly sin around receivables. So as I record this, as I did with the other ones, I'm looking at the business fundamentals training. So I'm using that slide for guidance, okay? And so in terms of receivables, so this means accounts receivables, which is the money that your customers owe you, okay? So when we say receivables or accounts receivables, it's money owed to you. Whereas when we say accounts payable, it's money you owe, okay? Because definitely those two can be really confusing. Like if you ever ring an organization and they say, do you want accounts receivable or payable? And it's like, I don't know, payable to who? Payable to you, payable to me. So all these terminologies can be quite confusing. So when I say receivables, this is about the money that your customers owe you, okay? So depending on what business you're running. So for me, for example, I run 2 businesses primarily. And in those 2 businesses, we receive money from our clients basically before we give them the service. Yeah. So we're never really in a place where we have got customers owing us money, so to speak. And that's the ideal cash flow scenario. Yeah. Think about for a minute, when you invoice your customers for products or services, when do you collect money? Do you collect it right there and then when you're delivering the product or service? Do you collect it beforehand or do you collect it after? Okay, so if you collect it at the time of doing the product and service, well, that's going to give you a positive cash flow, the same as if you collect it before. If you collect the money after you deliver the product or service, then there is the cash flow gap, okay? So in the 7 Deadly Sins ebook that we have available for you, that strategic bookkeepers all over the world have available for you, we talk about this concept of thinking of cash flow in many ways. But one of the ways to think about it is when you receive money from your customers after you have to pay anyone else, be it your staff, your suppliers, the tax department, anything, then that's where the cash flow gap is. So if you receive your money from your customers 1 day later than you pay anyone, you've got 1 day of cash flow gap. Then it becomes 2 days, 3 days, 4 days, 5 days, and so on. Okay? So that education that I'm giving you there should help demystify what the whole cash flow thing is, because entrepreneurs on the whole don't really understand the difference between cash flow and profit. And that's normal, natural, and you're in good company if that's you. like I talked about in the other episodes, your numbers knowledge, your numbers acumen is a journey. Okay. So what you learn, you need to learn over time. You're not going to learn everything in one sitting. Okay. So this sin around receivables is very much linked to what I just said to you, but I'll frame it up the way that we frame it up in the business fundamentals training. So in terms of your customer invoicing and collections systems, you're not a bank, so don't act like one. Invoice promptly and collect money immediately before delivery of product and services. Remove barriers for your customers to pay by taking credit card and smart automated systems. So basically, I want you to score yourself on how you're going with receivables. Okay, a perfect score is 1. Room for improvement is 0. So let's look at what does perfect look like and what does room for improvement look like. Well, in my business, as I would score us a perfect 1, because we are collecting money from our customers before we deliver the product or service. Do we ever make a mistake or something happens? Like, we've got all of our clients in the bookkeeping practice, they pay us on a monthly basis in advance of the month's work that we deliver. And we do that by just debiting their nominated account with our software. Okay. Now, occasionally, for whatever reason, a debit might bounce. And that means technically we've gone into a collection scenario. But we have standard operating procedures in place, etc., to handle that. So perfect doesn't mean nothing goes wrong. Perfect is really the basis of your system being that you are receiving money in from your customers before or at the time that you deliver the product or service. The other scenario that I might consider that you could give yourself a 1, like score perfect, thinking of clients that I work with, is let's say you were a plumber and you were doing work for builders where you were in a position where you felt that you had to give them a 7-day account, for example. Now, if you had, like I talked about a minute ago, so I'm looking at this slide again. So it's these collection systems. So if you've got systems, processes, software, automations to make sure that you always get paid within 7 days every single time, just like my builder that's renovating my house right now. He invoices me at the end of the week. I pay him really fast, like within days. If I haven't paid him within days, he's on to me. Yeah. And he would not be turning up to continue my work if I didn't pay him within 7 days. He is running what I call a perfect accounts receivable system, because this is black and white. Okay. So back to that, like I said in another podcast in this series, I love that numbers are black and white and there's no gray. Yeah. The account is 7 days. You pay me within 7 days. Otherwise, I don't turn up and do any more work, that kind of thing. So if you've got a really perfect system of receivables that has got you into a position where you have no cash flow gap. So let's use that builder as an example. Because he is very careful to make sure that he's always got tons of demand for his services, and then he's working with clients that always pay him within 7 days, and he's been running his business for long enough that he always has residual profit and cash in the bank. That means that he has always got a positive cash flow in order to pay his staff and his suppliers, etc. Okay? He's got rules in place and he doesn't break his own rules. Yeah? Versus let's look at what we see maybe 80% of business owners do. So let's say, actually, I saw this with a pest control business recently. So they come out to my house and they do the work and they don't collect the money. I don't understand this. Yeah. Some business owners will argue with me and say, oh, well, that's because we use subcontractors or we do this or that. I'm going to tell you that there are systems and processes and ways that you can, regardless of using subcontractors and so on, that you can automate getting paid at the time of service. So if you work B2C, that is business to consumer, you absolutely must be collecting payment before or at the time of doing the service. Yeah, either one. A lot of people are quite happy to pay for you before you deliver the service. So no excuses, yeah, if you're working business to consumer. And in fact, did you know that Australians are second only to Nigeria for how bad we are as payers? So if you don't collect the money from the consumer at the time that you are delivering the product or service, there is a big risk that you may never get that money. And in Australia, there is not any really good laws to support us as business owners collecting, okay? If you have to do collections, if you have to spend time and money and resources on collecting money because you didn't collect it there and then, that's a recipe for profit bleeding, an inefficient business, and you wondering why the profit's not there even though the revenue is, okay? In terms of the 7 deadly sins, and this being the third sin, this is probably the sin that I see make businesses go broke. Maybe the most often I see this one, because this is the true one where even a profitable business on paper can go broke because of cash flow. And that sentence, that statement, can be confusing in its own right. And I'm not going to explain all of that today because, as I always say, this is the beginning of your journey, not the end. Okay. And this is why, as a business owner, you have no option but to commit to, if you're going to run a successful business, you need to, in the words of Michael Gerber, as I've said before, the skills and experience required are different to that required to be a great plumber or a pest controller or whatever it is, or a bookkeeper. Okay. So you need to do all the things. And one of the things is committing to educating yourself around the numbers and then taking action based on the numbers to create a solid, robust business, that gets all the things right, okay? So go ahead and score yourself. Have you got a perfect receivable system? Or if you're being honest with yourself, and the first person that you always need to be honest with is yourself. If you're looking at the way that you're collecting money from your customers, are you really doing it as well as you could? If you're sitting there thinking, yeah, but Jeannie, you don't know. If you're saying to yourself, yeah, but Jeannie, you don't realize that we can't do this. No, that's excuses. Yeah. And I know that that's a bitter pill to swallow. Right now, I want you to score yourself a 0. If you are not handling your receivables in a perfect way, as I've explained in this podcast, you need to score yourself 0 and you need to do something about it. Yeah, with this one, I am so passionate because I have literally been there with business owners that have gone under and declared bankruptcy when they've made what we call an accrual profit, meaning for all the invoices they sent to their customers, they're profitable. But because they didn't collect the money in time and they had obligations to pay, the cash flow gap, they couldn't fund that. They couldn't loan money to pay everyone. And when you can't meet your obligations, because you don't have the cash to pay it, because there's a cash flow gap, because your customers haven't paid you yet, you will close your doors, okay? And the bigger your business grows, the bigger this pain gets. When you're little, it's a little pain. The more you grow, the bigger the pain gets, okay? So there is so much more I could say on this topic, but I think it would serve you better to talk about the action that I recommend that you take, okay? And it's the same action that I've recommended in the other ones. I recommend that you make sure that you're working with a strategic bookkeeper, okay? And you may have a strategic bookkeeper now. You may have got this podcast from your strategic bookkeeper. I recommend that you make sure that you are engaging in the strategic bookkeeping process rather than just the basic bookkeeping process, that you've done your health check, that you've done a now future analysis, and just talk to your strategic bookkeeper about that. And if you need us to connect you with one, you can send me an email and we can do that. I'll see you in the next episode. I hope you enjoyed that episode as much as I enjoyed recording it. I would love to help you start doing better in business right now by giving you a free little ebook. It's a how-to guide. It's called The 7 Deadly Cash Flow Sins. And also I've developed a business health check for you. It's super high value. Both are available at betterinbusiness.global. If you would like to fire your bookkeeper and hire a strategic bookkeeper to start enjoying a return on investment and get the support you need to optimize your business cash and profit and time well, simply visit betterinbusiness.global, drop me a line and I'll connect you with a certified strategic bookkeeper near you. I'll see you in the next episode.